This week, global economic data disappointed by the most on record, plunging to its lowest since the great financial crisis. But stocks are up over the last few weeks, right? Small cap stocks actually outperformed on the week as the Friday afternoon buying panic helped float all boats. But the Dow Jones Industrials and transports were weak. Oil turned out to be the action this week with the eighth weekly drop out of the last 9 weeks. Blood was definitely flowing with negative oil prices in many locations because of the lack of storage. And when Fed officials hold their regular policymaking meeting next week, all the lights on their dashboard will be flashing red. The unemployment rate is expected to reach double digits by June. And with the global demand cratering, the Fed's preferred measure of inflation will likely fall to 1% or even lower by the end of the year. This is well below the target of 2%. So, with oil going negative, when will interest rates go negative? Maybe sooner than we like. And lastly, on Friday, the VIX retreated to 35.93. This is the lowest since mid-March, but keep your eyes open because it can spike in an instant. I'll be watching for the next 2 weeks because I have a sneaky suspicion that the cooling, simmering of the VIX may just boil once again. So, how did the charts look? Well, let's take a look. And today we're going to look at one chart, which is the 1 year daily on the spiders, the SPY. The close on Friday was 282.97. And from this bottom here in, say, late March, the top is at this point here. Now it's interesting that the major indices have a topping at that point here, whereas the current level is slightly lower. Now, juxtapose that with the VIX. The VIX has retreated to its lowest level since mid-March, so why aren't the indices at their highest level since mid-March? I'm suspicious, so that's why I keep an eye on the VIX. So it is possible that from that bounce here off of the 20 EMA, that the indices, in this case the spiders, can continue to go on up, and I'd like to see them get past that previous high, and I'd like to see that VIX calm down more. But until it does calm down more, I'm going to be suspicious of this move. The MAC here, you can see that the fast line started to retreat, started to weaken, but it got reflected back on up here. So we'll watch that as well too. I think it's in a topping process right now, and that's indicated by the histogram here. Definitely topping at that point there, moving on down. But it can always come down here, do a little bit of base, and head back up for at least a time. Now, here into the price rate of change, this is the highest level that we've seen in a long time. And even here is relatively high compared to the last few years. So again, that is triggering my suspicion. This needs to come down. And if it comes down, that might also bring the market down. Here into the relative strength index, we're fine. Looks good. Nice power on up, reflecting off of that midline or 50 line, so everything looks fine, at least with regard to that oscillator. Now, the stochastics look like potentially a topping process, but that fast line is spiking up here. It may come up. We'll see if that does reflect back down again, because that'll tell us what's going to happen with the markets. Again, the Williams definitely topping process. And even though we've got this moving on up back into the overbought territory, it's definitely lower than up here. So it has a ways to go before I would say that the market is strengthening again. Right now, that to me shows weakness. So that's why my yellow lights are flashing, not necessarily red, but just cautionary flags out there. So be prudent and be patient. I think we're going to get another retracement, but it may take a few weeks. Until then, that's ChewDog Charts. Thank you.